think the stage has been set for a recovery in copper for a very long time. The factor, I think, that's held back a surge in copper price and really a surge in investor interest in copper has been macroeconomics, which is to say the specter of inflation, which has hung over all markets for a very long time. The stage was set for a resurgence in copper prices based on supply, because for 30 years we've underinvested in copper as a society. We've underinvested in exploration, we've underinvested in construction, we've underinvested across the supply chain, at the same time that we have increased the direct and indirect costs, particularly the regulatory costs around copper. The interest in Vancouver, as an example, is all to do with Western narrative and ideology, which is to say, the electric vehicle. The stage was set really very differently, I would suggest, in the decade of the 90s and early 2000, when the urbanization of China began. It is the lifting up of the poorest of the poor in humanity, the electrification of rural people, that has really changed copper. When Deng Xiaoping said to become rich is glorious, that set off the pace of urbanization in China, which gave us the decade of the 90s. The decade of the 2000 to 2010, spectacular. The next move in copper will be as much due to providing electricity to the billion people on Earth that don't have electricity, and the increase in electrification for the 2 billion people on Earth who suffer from intermittent or unaffordable electricity, as it does little iPhones or the electric vehicle. The only thing, I think, that gets in the way of copper in the next 5 years is what everybody was afraid in the last 5 years, which is to say it's been a very long time since we had a synchronized global recession. You can have supply shortfalls, which we will in copper. There's no escaping it. But if you have a demand shortfall too, it doesn't necessarily have to move the price. Finally, for old investors, you're looking at one, very old investors, what you find is that copper mines traditionally are very big, and they tend to make big copper mines big money. There are any number of copper mines around the world that make $1 million or $2 million a day. Big money is made on big mines, and copper mines are big mines, which is why I've always loved them.
Rick Rule, a prominent investor, believes that copper, along with other hated assets, is poised for a significant price surge. Despite macroeconomic hurdles like inflation, the stage is set for copper's comeback due to decades of underinvestment in exploration and supply chain infrastructure. Regulatory costs have compounded this issue. Historically, big copper mines yield substantial profits, and the next wave of demand will come from electrifying rural and underserved populations globally. Rule's insight underscores the potential in copper investment, suggesting that smart capital allocation can lead to exceptional returns.
Let's do the disclaimer first. I'm the largest shareholder of Sprott. So obviously any sector where Sprott can raise $4, $5, $6 billion, I'm solidly in favor of. I wish that Sprott had started this fund 5 years ago. I wish we could have built up a $2 or $3 billion pool of this material early and cheaply, like we did in the silver space, like we did in the uranium space. That notwithstanding, that the logistics have been dealt with, which is to say, now that we find that we can store large amounts of copper cheaply and not unduly burden the trust with storage and transfer expenses, I think this is going to be a tremendous, tremendous service to investors. I don't think that our ability to mobilize institutional and retail capital for physical copper will impact the copper market to anywhere near the extent that we've disrupted the uranium market. I suspect that the Sprott physical uranium market, and I don't have any facts to back this up, I suspect in the uranium space that we probably now control 2/3 of the uranium available for sale in the spot market. We will never be able to do that in the copper market. What we will be able to do is what we were asked to do, which is supply very, very, very good returns on capital employed for the shareholders of our copper trust.
Continuing the discussion, Rick Rule notes a key trend in silver investment. Interest surged when silver hit $30, despite no one caring at $24. He stresses that real profit in commodities comes from contrarian investing, buying what's hated. 6 months ago, negative social media sentiment on silver signaled a prime investment opportunity. As gold moves, silver follows, with its small market cap allowing for huge gains. However, Rule warns about illegitimate junior silver stocks, advising investors to focus on credible individual stocks for real returns.
It's interesting to me that nobody cared about silver at all at $24, and people are starting to care about it at 30, which is to say that people don't care about a narrative until the price action of the commodity has made the narrative less valuable. You make money in commodities and commodity trading, I should say investing, by being a contrarian. You make money by buying stuff that's hated. You don't sell newsletters or, by the way, promote conferences by doing what people actually need to do to make money. The part of the silver trade that was a no-brainer for me 6 months ago was simply that anytime I said anything positive about it, the social media reaction was overwhelmingly negative. That let me know I was in the right place. It is true that trend followers do better because of silver volatility than they do with maybe any other commodity on the planet, with the possible exception of uranium. I guess that $30 is an important psychological barrier. I would point out to speculators, if they actually care about facts, that the $30 price tag is a nominal price tag, not a real price tag. $30 today isn't what $30 was 5 years ago. It's a factoid. From a net present value viewpoint, it's an absolutely irrelevant standard. If people need to focus on irrelevant standards in order for them to do the right thing, I'm certainly okay with it. But I sort of wish speculators understood the reason behind the narrative and understood that facts matter. Now, in my experience, gold has to move for silver to move. Gold has moved, particularly in currencies outside the US dollar. So it makes sense that silver would begin to move. It is also true that the market capitalization of legitimate silver companies, will return to legitimate in a minute, is so small that when the narrative attracts the generalist investors, that is, people who are interested in, quote, breakout points, that the market capitalization of the silver space can't handle the money that comes into it. And the upside in these stocks becomes unbelievable. Unfortunately, what happens because of the history around these things, these things meaning silver in particular, is that the cost of capital for the penny dreadful silver explorers is traditionally much lower than it is for other sectors. And you get all these pretenders in the space, which is to say, if somebody buys the sector, junior silver stocks, there's probably 150 names in that space worldwide. Probably 15 are legitimate. That isn't to say that schlepp, schmuck, and schmo silver won't go up when the great unwashed pour into the silver space. What it does mean is that a legitimate speculator who looks at his or her upside and downside needs to buy individual stocks, not the sector, and not get too excited about artificial or intellectual parameters.
Thanks for watching. Quick recap. Rick Rule highlights copper's potential due to long-term underinvestment and rising regulatory costs. China's urbanization and future electrification needs will boost demand. For silver, he stresses contrarian investing. Despite initial disinterest, silver's recent price action has drawn attention. Focus on credible individual stocks, avoiding many illegitimate junior stocks. If you enjoyed this video, like, share, and subscribe. Share your thoughts in the comments below.